Dear ladies and gentlemen, welcome to the quarterly Šiaulių bankas webinar. I am Emilia, an account manager at Nasdaq Vilnius, and I'm pleased to introduce today's presenters, the CEO, Mr. Vytautas Sinius, and the CFO, Mr. Donatas Savickas. Firstly, the management of the company will comment on Šiaulių bankas financial results of the third quarter of 2020 and guide us through the recent events of the company. Right after the presentation, we will open the floor for the Q&A session. During the presentation, you shall type your questions to the question box on your screen. So, let's begin. Dear guests, I invite you to start the presentation.
Dear ladies and gentlemen, good afternoon and welcome to Šiaulių bankas webinar. And thank you for spending time on our presentation and on your interest to Šiaulių bankas. So my name is Vytautas Sinius, so I will present bank's development based on the third quarter results that were published at the very end of October. So we can move on to the slide number 3, where we just have a snapshot of Q3 results. So results are rather strong, taking into account all the environment that we have in 2020. Net profit of a quarter stands at 13.3 million euros, and that quarter is one of the best in the last 6 quarters in the past, and partly it has compensated lower results of the first quarter, which was mostly impacted by developments in the macroeconomic environment, or trying to predict the level of impact of the pandemic. So the third quarter, the provision level was rather small, 0.8 million euros, and that also had a positive impact on the bottom line for the net result. Worth mentioning that net interest income, despite that the portfolio was, I would say, close to flat level, showed some increase. So 1% quarter-on-quarter level and 6% increase on a yearly basis. Also worth mentioning that we made some adjustments of our forecast in April, when we faced initial impacts or estimations of a pandemic. So we were making quite drastic adjustments for 2020. However, 3 quarters showed much better development that were projected at the beginning, and we updated our some key indicators for 2020, improving return on equity that we expect to be close to 12% instead of 8% projected in April, and cost of risk we expect it could be in a range of 0.8%. Just to remind that our updated before forecast was 1.4%. And cost of risk at this time we assume a slightly better indicator than NPE position that we were tracking and projecting previously. So if we would move to the macroeconomic update, probably number one topic that influence most of the parameters on a macro level is a pandemic. Lithuania as a country, I would say, withstand quite successfully the first wave of pandemic, and we were not strongly influenced compared to the previous projections. And I would say that 2020 was, the year of big swings in macroeconomic projections, starting with a very negative estimations both from the local and international institutions for Lithuania. However, recent updates shows much opposite view, and Lithuania seems to stand at the level of those who are at least the smallest impacted by the pandemic, with potential decline of GDP in 2020 only slightly above 2%. So we can compare with the average of Euro area or EU that are much above 7% as expectations of 2020. Yeah, we have several months left to be finished, and we'll see the actual results, but most likely this level of real GDP could be quite close to this projection, because the large part of the year already has passed. Talking about inflation and unemployment, I would say nothing drastic from Lithuanian perspective. Slightly higher inflation than in the neighborhood countries and on average in EU, so shows quite overall strong development of a country and the consumption and the consumers' behavior. And unemployment rates expected to be at the level of 8% in 2021, and for this year close to 9%. What made us to be a bit more better resilient against the virus impact? So I would say well-managed situation in a pandemic of the first wave, and quite small dependence of a country related with the tourism, and well-diversified structure of our exports to the different countries. One of the key elements that allowed us to maintain strong results of our GDP development. Now moving to the Šiaulių bankas main balance sheet item development, loan portfolio. So we see different trends. Talking about private client portfolio, we have, despite the old environment, pretty strong development of +6%. A bit different trend in a corporate lending, which is on a yearly basis -5%, and that made our development of portfolio -1% on a quarterly basis. But if we evaluate Šiaulių bankas loan portfolio development on a yearly basis, we have 7% growth. Worth mentioning that according to the second quarter figures, we can compare ourselves with the market. So the total market decreased by 3%, while Šiaulių bankas market share increased by 70 basis points up to 8.3%. And as I mentioned, the same as for Šiaulių bankas, the major decline was in the corporate loan sector, which is in the market was -14%. And since Šiaulių bankas decline smaller, we gained market share by 1.5 percentage point, and the level stands now at 13.8%. On the graph on the right hand side on the bottom, we see that the development of Šiaulių bankas new agreements slowed down in the second quarter, but in the third quarter we have rebounded to the level close to 200 million. So worth mentioning that in 3 quarters, in 9 months, we have approximately 400 million euros without Danske Bank acquisition. That Danske Bank portfolio acquisition increase in new agreements, and half of that are related with a corporate client new loans, and the other half is related with the private individual growth of a portfolio. So we can drill a bit deeper to the private client lending, so about mortgages and consumer financing. So the main driver of our growth of a private individual loan portfolio is mortgage lending, which successfully bounced back after April and May slowdown, when the impact was most visible after the quarantine, and the third quarter came back to the level of approximately 27 million of a new lending to the private individuals of mortgages, and that allowed us to increase our market share by 1.4 percentage points up to 2.8 at the end of the third quarter. With the consumer financing, I would say the trend's a bit more flat. So you can see the portfolio development is rather flat trajectory. And the reason is that the portfolio amortize much faster, and the sales of previous quarters were slightly lower than in 2019. However, the third quarter again shows rather decent level of new sales after the second quarter. So that also resulted to the increase of our market share up to 11.6%. And the reason is that the market was detracting, and our consumer financing portfolio modestly but was growing. Loan portfolio breakdown. So our key message in here, I would say, is that we continue to diversify our loan portfolio from the different perspectives. So one perspective is related with larger share of private individual loans in our portfolio. So it's coming to the 30% part in our total portfolio, which is again split in different sectors with different risk profiles, including renovation, consumer financing, mortgages, and as I mentioned previously, mortgage part is growing fastest in all those segments. Another aspect of diversification is the reduction of historically high level of our portfolio, like real estate and construction. So we see decline in those sectors. And the third element of better diversification or less concentration on the top positions is decline of top 10 exposures in our portfolio down to 12.3%. And also worth mentioning that we performed some deferrals for our loan clients, or our credit clients who needed some additional supports during the period of moratorium, when countrywide we discussed how is the best to help clients to go through all this COVID-related challenges. So currently we have 228 million euros repayment portfolio of the clients that have some holidays for their repayments. So that constitutes 13% of our loan portfolio, and the lion's share of that amount comes from legal entities. 217 million and 11 million are individuals. So most of the clients will come back to and already came back to the usual loan repayment schedules. Current situation shows that some of them will need some additional tools to support them, both from bank's perspective, reviewing the repayment schedules and prolonging some holiday periods with interest payment payable, and hopefully from state of Lithuania also would come some additional measures to support businesses. So all those things under discussions currently. The next slide describes loan portfolio quality. So total amount of provisions for loans are during 9 months stands at the 9.4 million level, out of which, as I mentioned, 0.8 million were accounted during third quarter, which is relatively smallest provisions compared to the previous 2 quarters. Also worth mentioning that out of this 9.4 million of provisions accounted this year, 6.2 million are related with impairment losses related to the COVID-19, and that comes mainly from macroeconomic adjustments and sector related adjustments, or different client sector related adjustments. And this 6.2 million euros, I would say, is like a reserve created that could migrate either to individual assessment, so to individual loans as an impairment on individual level, or will come back as a reverse of formed provisions back to the positive result on the bottom line of Šiaulių bankas. So that will depend how further macroeconomic situation develops, how the sector related provisions will be converted either to particular individual positions or reversed, as I mentioned. The good thing that 30 days overdue, more than 30 days overdue, and NP positions rather flat in this environment, with overdue 30 days even having some trend downwards, down to 3.3%. In a percentage, and also, as you can see in a graph, in the absolute terms as well. But the year is not ended. The pandemic is not managed in full. Therefore, it's too early to make decisions. So we can be happy only about the current status of our portfolio development, but we need to go through all the cycle and then to count all chickens. And also worth mentioning the stage 2 increase. So we applied a bit more conservative criteria defining our stage 2 loans, and we have increase in that part up to 443 million. That was also including part of the restructured clients, because forborne positions are also moving to the stage number 2. But stage number 3 loans, I would say, still rather flat and stands at a level slightly above 90 million euros. Let's move from the loan-related topics to the daily banking, another part of bank's activity. So commission income bounced back after the quite sluggish second quarter and came back with increase of 22% on a quarterly basis. However, this year of 9 months compared to the 2019, slightly lower, 3% less income, net fee income compared to the 2019 three quarters. And yeah, I believe that this short-term trend of trends influenced by the COVID and quarantine closure of the branches that made quite strong impact on the second quarter results of the commission and fee income. It will be only the short-term trend, and when the situation is resolved, we will come back to the levels growing of our commission income due to the naturally growing activity of both private and corporate clients, and also the growth of the clients itself in Šiaulių bankas. So overall, I see quite positive commission income development. However, this short-term trend related with, as I mentioned, impact of the quarantine, the lower tourism level in the country, so those definitely will leave some mark in 2020 commission income. The good thing that we've spent this time on the development of our electronic channels upgrade. So both mobile application is launched recently, so you just see some shots from the mobile phone application, which is I believe will be enjoyed by our clients, and both from mobile banking application and their internet bank, which now is on the beta version, our clients will migrate smoothly and as I said, will enjoy using the new applications, which are much more modern, much more client-friendly, and easy to navigate and to use different type of services. Also worth mentioning that the pandemic influenced the client behavior related with the service channels. So we had a strong increase in our contact center offer approaches from the client, both private and corporate. So increase during the quarantine time was more than 80% higher than pre-quarantine time, and currently we're experiencing 40% increase in different online inquiries compared to the pre-quarantine, pre-COVID time. Another thing worth mentioning that payment and debit and credit cards remain popular in our client base, and we have pretty strong growth both on private individuals and the corporate clients payment cards growth. So the private individuals we have increased 11% during the year, and with the corporate clients this growth even high, 28%. Okay, so we can move to the next slide related to treasury operations. So it includes foreign exchange and securities. So for the foreign exchange, worth mentioning that the third quarter improved after the quarantine influenced second quarter, which was the lowest in the previous 6 or 7 quarters. So this return again makes us feel positive about quite easy comeback after the lockdown. Talking about securities, we enjoyed rather positive environment for the bond market during the last several quarters. Therefore, our development is quite strong compared to the 2019, increased by 27%. And since liquidity is increasing in the bank, major part of that accumulates in the group security portfolio that has grown to the 775 million, and that is again 22% increase compared on the same period in 2019. Now moving to the funding slides, I would say probably the most stable and constantly developing upwards trend of deposit portfolio growth. So 10% increase in 2019, and during this year we already have 12% growth. So the situation is with the funding is strong, no major issues with that. Probably just worth mentioning that term deposits slightly decreased and demand deposits showed major impact on that mentioned growth. So 109 million euros increased in the third quarter. The lion's share, more than 2/3, comes from the corporate clients, and the 1/4 from the private individuals. This stable growth of deposits also reflected in the loan-to-deposit ratio that decreased to 76% from 81 compared with the end of the second quarter. So again, it opens more room for our future loan book development. Cost of funding roughly stable, 0.4%, and since liquidity and deposit development is stable, there were decision made in October, starting from October, to make some changes in our deposit pricing, and that will also benefit in our net interest income in the future positively. Just to touch on TLTRO, that we have used 150 million euros after the maximum limit that we can have, close to 600 million successfully. However, current environment is not signaling that we would need to use additional part of out of that limit. So now we just utilized only part of that. Okay. Now the second topic to touch is about capital base and liquidity. So just covering liquidity topic, the graph itself shows strong buffer above minimum requirement, which is also, as ECB mentioned, is a bit more kind of looser monitored and not that much hard to follow in this difficult time for other banks, but for Šiaulių bankas this is not a question, and with 300% we are strongly above minimum requirement. On capital adequacy ratio, I would say we have a similar situation, that official minimum requirements were reduced, in our case down to 9.4%. However, as you can see in a slide, dotted line shows capital requirements before releases of the capital buffers related to COVID-19. It stands at 12.4% plus B2G buffer, but our figures are strongly above both of those current minimum requirements and the requirement that will come back after the COVID is treated. So our both risk appetites and actual capital adequacy ratio have sufficient reserve above the minimum requirements. And end of the third quarter preliminary figures are 19.6. Again, if we would add the interim profit, so this level will climb up above 21%. Worth mentioning that we are in the midst of the process called comprehensive assessment, which comprise of asset quality review or AQR and the stress test exercise. So the process, I would say, develops smoothly. We are in the very middle of this activity. So all the information that were needed from Šiaulių bankas side were presented to ECB team and auditors in time, and we're happy about the quality of information that we managed to generate, but it's too early to say about results since the process still goes on, and now on the side of ECB to evaluate the presented information and to come back with results. Yeah, and talking about the capital reserve, again, I mean, it's still too early to say what possibilities would be the most potential for us, but definitely this reserve that we now accumulated through the several of years shows strong reserve for potential loss absorptions in case the situation strongly deteriorates in the countries, in Lithuania and in neighbors. This reserve is also potentially could be used in the strong growth after the COVID. So the potential of growing our loan portfolio, looking from the capital perspective and from the liquidity. And another option is the potential, return to stronger dividend payouts if other conditions are met. So we are with that level of capital adequacy ratio. We have different options, and depending on the situation, it's possible to choose which the best way to move forward. But so far, I would say we need to close the year and to see the full picture of 2020. Slide number 13, some information on our social and green finance initiatives. So first to be mentioned is our cooperation with the European Investment Bank, and very intensive discussions and works related with new modernization fund origination, which indicates 200 million euros of potential fund, which is rather several layer structure with the senior loans, with the junior loans, with first loss absorption layer. So we are working hard on that and expecting to have more news either this quarter or the first quarter of 2021. And with that part of development, we continue our commitment to be a strong player in the green financing related with the energy efficiency part, since all those projects that we are financing, they make a strong impact on the country's energy usage, and most of the houses, they are saving more than 40% of energy compared to the state before the renovation. So we are committed to that business line, and we see the reason to be there not only from the commission income, but also from the purpose to be part of that green finance. Another initiative that we launched just in the light of the COVID-19, so as we call it, Plan A, and this initiative is about support of small businesses that are most negatively influenced by the COVID-19, different type of challenges, and we created a kind of platform connecting larger companies and different type of other stakeholders that are willing to support smaller businesses, and to make aware of the possibility for private individuals and for the companies to use those services and goods of the small businesses that are around us in Lithuania, and by that making more of them viable and to survive during this difficult time. So more than 1,200 companies has joined this initiative, so we're happy about leading this Plan A. And last but not least in this field is our disclosure of a climate change impact data to the CDP, Carbon Development Project, Carbon Disclosure Project, sorry. And this is our commitment in the future to provide this information and to participate in the field of working environment, making it more carbon neutral. And the last slide from the presentation related as traditionally with the share valuation data and different type of ratios, and some information about Analyst. So we're happy that already 5 different analysts covering Šiaulių bankas stock. So the last who has joined that list is Inlight Research, that in October started to follow Šiaulių bankas stock, and this is a commissioned research of Šiaulių bankas stock. So they are started with a level of target price that they defined in October, stands at 61 cents per share, and they will continue to provide the research periodically, and that could be visible and available to anyone who wants to read that on the website Inlight Research. What we are happy, also worth mentioning, about the liquidity of Šiaulių bankas stock in the Nasdaq Baltic. So we continue to be the most liquid player in the market, and even beating our own turnover results. And again, 2020 turnover of 70 million, already much higher than in 2019. And average daily trading stands at the approximately level of 350,000 euros per day. So due to the COVID-related challenges, the banking sector was hit strongly with valuation. So the same situation with Šiaulių bankas stock. So we stand now at the level of 0.7 price to book value with PE ratio at 5.5. So it's roughly cheap valuation compared to our previous years, and I believe that we will gravitate towards to that level. And yeah, ending my presentation, I would like to mention that we are committed and continue delivering strong results of Šiaulių bankas. So we hope that this year would be successful as a whole year. Of course, we have some challenges in the fourth quarter to cope with, but the general trend is rather strong. And being as a consistent and focus to our local market, we will continue to strengthen our brand through our commitment of being the best service company in the country, and also providing best financing solutions for SME and private clients. So thank you for your attentions, and myself and Donatas will be glad to answer your questions. Thank you.
Thank you for the presentation and thank you for the comments. Now we will proceed with the questions. Before that, I would like to remind you that you can send in your questions in the question box of your screen. So, first couple of questions we received in advance, hence let's start. Could you explain cost of risk assumptions development throughout 2020 and how does it compare to your peers?
Good afternoon, ladies and gentlemen. Donatas Savickas speaking. So I will take this question. As it was presented, we received this in advance, but during the presentation, Vytautas quite broadly described the logic. So I could approach this question from a little bit different angle, saying that all concept of IFRS 9 requires that provisions should be made based on assumptions regarding future development of economy and the portfolio quality. Therefore, this year was challenging for all market players in order to put right assumptions when COVID pandemic crisis began in the first quarter of this year. So Šiaulių bankas initially took a rather conservative approach, making provisions for first quarter quite aggressively, and it was not the case with all other players that we are also monitoring very closely, and we are monitoring more than 30 banks across the region and Central Europe and looking at how they are acting. So we started very aggressively, but as this first wave was managed quite well here in Lithuania, we updated our assumptions later on to more positive mood. Therefore, but after 3 quarters, when we look the average cost of risk that is in Šiaulių bankas is 0.7. When we look to our peer group, so we see that we are quite in the middle of this range. So the sum of banks, they are ranging from 0.1 up to 3% of cost of risk. I think that this will be the, how to say, the average. So the portfolios are different in all banks, but we will end the year having the, how to say, adjusted level of cost of risk that we said based on today's perspective is we are thinking about 0.8 cost of risk as of whole year.
Thank you. Could you please elaborate on net interest margin development in upcoming quarters and 2021?
Yeah, probably I will take this as well. there are different factors that affecting net interest margin, which is currently stays at 3.1% in Šiaulių bankas. From one hand, as we became more active in mortgages portfolio, which is good from that from the diversification point of view, but it affect our yield on average yield on loans negatively, because the loans yield for mortgages are lower than for business loans. So this is the pressure downward. At the same time, we are strengthening our positions in consumer lending, which on the other hand is more expensive than other types of loans. That compensate this negative effect I mentioned earlier. Business loans, probably we don't expect big changes, but of course the customers, once they negotiate their prices when they are getting loans, and the competition in this, we expect that will increase in the future. So probably we will have slight pressure downwards. From funding side, we see reserves to decrease our funding costs, because we are still paying not small, but still some interest on term deposits for customers, and recent change of interest rate downwards. We think that it will give positive impact to our net interest margin, and we see the possibility to continue this activity further if the pressure on assets yield will continue. Summarizing, I would say that our forecast for the future is stable NIM, probably with slight decrease, but not very significant.
Thank you once again. Another question that we have, does share buyback is considered by the bank? Current valuation share price to book ratio 0.7 shows it is a favorable moment to do it. Sufficient capital reserves also points for higher dividends than set in dividend policy. Could you comment it?
Yeah, that's Vytautas comment. Yeah, that's the two things important, the buybacks and the dividends, and current environment doesn't give a clear response to those two possibilities. I would say as of this year, most likely we will not make any clear decisions towards that, neither for buybacks nor for dividends, due to the several reasons and motives. So one is that COVID-19 pandemic is not finished, and the uncertainty with the second wave, which you've seen in the graphs developing quite drastically, doesn't provide full comfort of potential risks related with COVID-19. The second one is, was already commented, comprehensive assessment exercise is also important for us to pass through and to see the results. So we need to wait for that. Also worth mentioning that SREP that has been done by SEB is not finished yet, but we already had a discussion with our colleagues from ECB. So most likely we would not anticipate any major issues related with that. There is a number of things mentioned, but not that directly influenced the capital base. We need to finish that process as well. So once that closed, and the last but not least, ECB recommendations, which were prolonged as the ones that not supporting payout of the dividends in this pandemic period for this period. So, as I mentioned, we need to wait and to see the impact of COVID-19 for the current period, and to come back to this decision in the first quarter of 2021. But definitely, we have a strong capital base. As I mentioned, the capital adequacy ratio is a strong one. The rather low lending volumes in 2020 also creates additional room for the dividends and share buybacks. And definitely, we remember that for the 2019 profit, we haven't made any payments this year, so that profit is accumulated in the bank's balance sheet. So we'll definitely see the best way how to treat it in the first quarter of 2021. So there is a pros and cons for payment and for cashbacks.
Thank you for your answer. Another question, how do you see the banking competitive environment development in Lithuania in the nearest future? Market split between big banks, smaller, fintechs? In other words, what do you consider your competitive advantage in the future?
Yes, probably I'll take this question as well, Vytautas. So overall, I would say that the competition environment, especially in the near future, is becoming more and more competitive. Despite that, the environment is quite uncertain, but the banking market, both on the private client as well as the SME and corporates, is quite intense. So majority of the banks acts competitively, and probably some time ago there was a bit weaker competition and a willingness to accept risk. But the current environment, both from the client acceptance and from the margin development level, shows, I would say, rather healthy and strong competition, which is even more supported by newcomers, both on the payment industry, but you can see many new licenses has been granted by the Central Bank of Lithuania. So in the payment industry, there's many smaller players, as well as the new specialized banks and different type of credit platforms are established in Lithuania and starting to provide additional services to the private and corporate clients in Lithuania. So overall, I would say that the competition will continue to grow. I would say we are uniquely placed among other players, both larger and the smaller ones. The one who are, fully and uniquely local bank with strong coverage, both on the physical network of branches as well as modern channels for e-platforms, both as I mentioned in a presentation, with the mobile banking, with electronic banking, and contact center services. So we are pretty universal, but still not the large bank as some of the Scandinavian banks in the country, with much more flexibility and the ability to be closer to the clients. And I would say that's our key competitive advantages, but by being closer to the clients and with the flexibility to and with our historically built know-how in financing services, both private individuals, corporate clients, as well as projects related with renovation.
Thank you for the answer. Another question refers to the report. Hence it says, report page 19 says the bank bought 780,000 shares in 2020 and redistributed for salaries. Is it a typo to quote 2016, 2017?
Yeah, probably it's my turn to say on this topic. I don't have in front of me the report and the page 19, but I believe that is no typo because acquired shares are granted to employees of the bank and subsidiaries as the third part of variable remuneration, and it goes for 3 years backwards. So in our latest report, it could be that 16 and 17 are mentioned as these years that the payment were deferred for 3 and 2 years consecutively.
Thank you for the answer. We have one more question. Šiaulių bankas has increased its market share from around 6% at the start of 2017 to around 9% currently. Does the bank have a target over the next 5 to 10 years for a peak sustainable market share? And could you reach 20-25%?
Yeah, that's Vytautas. Yeah, we showed pretty strong development on our market share in different type of parameters. So we didn't make a kind of milestone where we need to land up with our market share. We mainly track the situation, how it's worth to develop our own portfolio, where our possibilities of a growth, and it also depends on the competition and market as such. So I would say that we will be willing to grow faster than the market. So we'll try to project our coming years with development of our portfolios growth faster than the market. So due to that, we expect further to grow our market share. So as a good example was our commitment to the mortgage lending, where we started mainly from the zero, and we are just in a few years we are close to 3% market share. So definitely, when you're becoming bigger, it's much harder to grow, especially in corporate lending, where we have already close to 14% market share. Nevertheless, with the growth of Šiaulių bankas capital, the larger tickets are available for us, either alone or through syndication. So again, there is a good possibility to continue growing our corporate client portfolio further. So our keys looking forward is strong diversification of our loan portfolio, looking for opportunities where the growth is the best from the risk and from the return perspective.
Thank you for the answer, Mr. Sinus. Another question that came up, given that Bitcoin adoption is increasing and even some public companies start to use it in their treasuries, is Šiaulių bankas considering to start providing Bitcoin-based service? If not, what could change Šiaulių bankas' mind in this regard?
Yeah, Vytautas here. In this regard, what could change our view is better understanding of the Bitcoin or other cryptocurrencies related risks, because currently the supervisor's position is rather conservative in relation to this new type of asset, and we will need to make furthermore discussions in banking association and with our supervisor, both Central Bank of Lithuania and ECB, how the supervisors would treat this engagement of commercial banks in cryptocurrencies, because this area is still quite undiscussed, and we have quite blunt and bold position from the Central Bank of Lithuania that license of the banks does not give the right to be involved in the dealing with cryptocurrencies directly. Probably in the future, this topic will be, as I mentioned, discussed in the industry and with the regulator, and opportunities, I believe, could come up, but probably not very soon.
Thank you for your comment. Another question that we have is, what is your loan portfolio growth expectations for 2021?
Currently, bank is undergoing the process of preparing budget for 2021, but as the situation is very, how to say, not clear, so it's difficult to say with assurance that about the environment next year. But I believe that healthy growth rate of low double-digit figure is achievable, and probably that would be our target while building the exact targets for loan portfolio growth for next year.
Thank you, Mr. Savickas. Let's move on to another question. How bank treated clients who needed grace period for loans? How significant part of portfolio received grace period due to COVID-19?
Bank tries to treat our clients with understanding and listening what they really need. That it's our approach for long term, and our customers appreciate such approach. So when COVID-19 affected all economies, so a certain percentage of our customers, exactly about 13%, approach to us regarding grace period for loans, and part of this were according the moratoria conditions. Part of them were not eligible for moratoria, but we also extended some grace period for them as well. Yeah, that's probably the answer. What this question? 13% of portfolio received grace period.
Thank you for your answer. Let's move on to another question. We have two very similar questions. So can you please comment more on AQR comprehensive assessment? What is expected timeline currently? So do you expect special provisions once it is completed, or have you accounted any special AQR provisions in Q3 provisioning? And another question, when the assessment process by the ECB should be completed, and when your CAR requirements will be determined by the ECB instead of the BOL?
BOL, Bank of Lithuania. Okay, so about the AQR, or comprehensive assessment, this is the exercise that consumes most of our time and efforts, especially people working in head office and working with the risk management, reporting, etc. So this is right now we are undergoing the peak moment of this exercise, and according to the preliminary timeline what was presented to us, but it is expected that it will be completed in the beginning of next year, namely end of February, beginning of March. What with regard about special provisions. So what we see from our other banks that went through this process in the last years, we see that the usual outcome is partial increase of provisions as well. In our case, the real impact is not visible yet, and it will become visible probably in the end of this year or in the beginning of next year. And it's question how these provisions could be reflected into our balance sheet and P&L. Whether it will be 2020 or it will be the first quarter of next year. So it's too early to say. And regarding the last part of questions about whether we accounted special provisions in third quarter, so the answer is no, because we don't have any indications about that. Another part of this question about when our capital adequacy requirement will be determined by ECB instead of Bank of Lithuania. So this process is called SREP, and we also undergoing this right now, and we expect the results to be published and announced by the end of this year. Yeah, that's all.
Thank you. Another question is from the investor who congratulates you with a strong result. So what is the yield on the consumer loan portfolio?
So thank you for congratulating with the results. I will just make a short comment since that information was also in the presentation. So the yield of consumer financing portfolio stands already several quarters in a row at the flat level. It's 11.4%. So it's a stable figure for quite a while.
Thank you for an answer. Another question is, what is dividend payout policy?
Again, probably I will not go a lot elaborating this topic since I've touched that, explaining our position about the dividend payment, but just reminding about our dividend policy, which is in place, which has been approved, is that we are willing to pay not less than 25% of our current year profits, but subject to some issues or topics that we'll take a look before proposing the dividend payout, so including the acquisitions, situations like COVID related, and etc. So there are some conditions towards this proposition, but our commitment is to focus on a figure that would be 25% plus of payment of dividends.
Thank you for your answer. Could you please explain what is renovation, which is considered part of retail portfolio?
Yeah, renovation, as I mentioned during the presentation, is one of our core competences, and probably different to the other players. We have that part quite visible in our portfolio. Currently, we have about 60% of market share in that field, but not going very much to the details. Worth mentioning that renovation, despite that it's structured through the financing of either Jessica Fund or the administrators directly, the ultimate payer of the credits are households. So that is the reason why that we are treating our renovation portfolio as part of retail clients, because we actually taking ultimately risk of the households. So it's again pretty strongly diversified portfolio, despite it it's structured not directly lending to the private individuals.
Thank you for the answer. Another panelist thanks you for the presentation and has two questions. So I will start with the first one. What will be the impact of interest rate decrease on deposits for 2021? And another question would be, since current outlook for Lithuania economy is more gloomy for the Q4 due to the lockdown, should we expect to see additional front-loaded provision regarding economy outlook in Q4?
Okay, I'll take these two questions. Regarding first one about interest rate decrease impact on our expenses, so it's difficult to say in absolute figures because this new interest rates applies only to new agreements, and they mature usually as the old agreement ends. New agreement is extended to the same depositor with the new interest rate, and it average duration of term deposits is about 1 year and more. So this impact will be gradually included into our P&L. Therefore, we don't see any significant and sudden positive effect, but in the longer term, it will give effect, as I mentioned earlier. Regarding second question about the gloomy outlook of economy, so today we live in very dynamic environment. So probably 2 days ago, when this lockdown was announced, everything was very gloomy. But the next day, the good news about new vaccine was announced, and markets reacted with huge enthusiasm. Therefore, to say today what will be outlook regarding perspective for the next year, we will have to answer this question by the end of this quarter. So today, to say what will be outlook at that time, it's too difficult because it's changing very rapidly to both directions.
Thank you for your comments. Another question would be, you mentioned that part of the portfolio which is currently under moratoria will need restructuring. Can you give us some flavor on that expected amount?
Okay, I will continue this comment about the portfolio affected by the COVID and which customers requested some period for repayment holiday. So in September, we made a review of these customers who enjoy this period and ask what their plans regarding whether we'll be able to renew repayments according schedule, or they will apply for new grace period. So at that time, about 10% of these customers said that they will probably apply for new grace period, but it was in September. So right now we are seeing a new environment, and probably as this grace period expires, so we will see the real picture, not projections. Probably it could be slightly higher than it was projected in September, but how much higher, it's too difficult to say today.
Thank you. We have quite a big discussion going on here. So we still have a few questions. in the market, we can see that employees are selling their shares acquired through the remuneration and thus affecting the market price of the share. Wouldn't it would make sense to deliver cash compensations to those employees instead of physical shares?
Yeah, thank you for the question. The issue, one of the issues, or one of the reasons that part of the variable remuneration is paid in bank shares is due to the regulation, because we are obliged for some part of the employees who are called nominated employees related with risk taking. They should have part of the variable remuneration in bank shares. I would treat that there's not that much influence of employees creating to the stock trading of Šiaulių bankas, since the turnover is increasing and the activity of both sale and demand side rather strong. So influence of employees is rather insignificant. And taking into account that variable remuneration is with a postponement of received shares, so the shares are delivered in 3 years period. So this is again partial gain for employees, and they can utilize only the part that they already have in their accounts applicable to sale. So I would not, at least in my experience, I would not treat that the influence is significant.
Thank you for the answer. Another question is, do you see yourself more as a dividend company or a growth company?
Again, I will not elaborate a lot on that, but just giving my view is that with current development and with the current possibility of Šiaulių bankas further to grow, but already generating a decent return in the previous, as it shows in the previous years, we are, I would say, both treated as a dividend, a quite solid dividend, potentially paying company with continuous growth perspectives in the country. So I would treat as a mix.
Thank you for your answer. Is there any target for retail as a percentage of loans? Would you expect that to get as high as 50% long term?
Yes, I would say that this proportion is potential for us to reach in foreseeable future with the current development of private client portfolio growth. Of course, it depends on the further development of real estate market, on the consumer behavior. But in the longer run, I would say we have good potential to have split of 50% corporate and private individuals portfolio.
Thank you for the answer. Another question would be, why hasn't payment services revenue growth with new card issuances?
Yeah, probably we can drill a bit deeper to the reasons, but the one of the reasons, especially and particularly for this year, because historically we've had a strong growth in that field of commission income. This year is related with the spending related with the card that clients of Šiaulių bankas were less spending abroad. And that one of the income lines coming from card expenditure outside Lithuania, and this field was influenced by the COVID-19 pandemic.
Thank you for your answer. And could you comment what is net profit target for 2020?
Yeah, as we mentioned in our presentation, we do not provide net profit targets. We do provide return on equity. So return on equity we expect to be in the range of 12%.
Thank you for your answer. I'm not sure if the answer was cut by the internet connection or not, but I guess we should continue. Another investor thanks you for the presentation and congratulates you on Q3 results. And the question is, in Q3, your mortgage portfolio grew 226% as you try to pick up in mortgage market to 2.8%. Do you see signs of housing sector bubble? And if it forms, how would you position the bank to take advantage, increasing its market share in the segment? Thank you.
Well, so regarding the housing sector bubble, probably I will base my position mainly on a microeconomist that more closer monitor the developments in the private individual economy and the real estate development. But I would say so far the indicators doesn't show any clear elements of a bubble related in the housing industry as such. I would say it's a bit more risk in the current environment related with the office building development rather than real estate related with the housing. So from our competitive advantage, I would say that we improved the processes related with mortgage granting. So that's one part that allows us quite easily to generate loans for mortgages. As well, our branch network and the physical presence creates easy access for the clients to meet the branch managers and to consult live. Of course, this pandemic situation influences that advantage, but coming back to the normal, we believe that's still important part of private individual decision to take the loan, which is once or twice a lifetime. Still, many people want to have a physical meeting and to meet branch person to consult on mortgage loan and to discuss that personally. So I would say, and Šiaulių bankas already, grown substantially to provide competitive interest rates for mortgages. So that's a reason I believe we could continue growth of our mortgage portfolio in pretty strong environment.
Thank you for the answer. And it seems that it is the last question that we have, unless we receive more. So the question would be, could you tell a few words about announced restructuring and selling off assets of spin-off activities?
Yeah, so probably question is related with some optimization of our subsidiaries, and we already, our strategic plan made decision to optimize our subsidiary structure. So the key subsidiaries are leasing and life insurance. And the last one that we are considering to aggregate most of the several companies' assets and business under the one umbrella of SB Turto Fondas. And that's related with the, focus on subsidiary that mainly deals with the foreclosed exposures. And current environment makes us to make faster exits of foreclosed assets, and having that under one umbrella, it will be easier. So that's mainly optimization of our structure, make it more clear, more transparent, more easy to understand. And yeah, with that, I believe we will cover all the short to mid-term needs of Šiaulių bankas group.
Thank you. As all questions are answered, on behalf of Nasdaq Vilnius, thank you everyone. It was a pleasure being with you today. Recording of the presentation will be available in the Nasdaq Vilnius Baltic YouTube channel. Dear management, thank you for the presentation and the Q&A session. It was very comprehensive. I wish you to have a good evening and goodbye.